breaking. Bitcoin has just reached one of the lowest levels of volatility in the history of Bitcoin, breaking this yellow line right here for only the 5th time in the past 11 years. The other 4 times that Bitcoin broke this yellow line, there was an absolutely surprising, explosive move that followed that took the world by storm. In today's video, we're going to break down these exact times that Bitcoin was at this low of volatility, and we're going to study the explosive moves, the surprising moves that happened right after that. And there are some huge hidden clues that we are going to uncover for what is about to happen to Bitcoin. Also, towards the end of the show, I'm going to be explaining to you what you should be doing right now based on this low volatility and based on the clues that we uncover. You're going to leave this video with a sense of calm and a sense of clarity, and you're going to know precisely what to do to get ready for this explosive move that's about to happen. Let's get into it. Welcome. I'm Steve. Here we deliver honest, sponsorship-free TA with genuine value. Subscribe for a no BS approach that actually helps you. Subscribe. Here we are, Bitcoin US dollar index, and we are on the weekly chart. What we have in front of us right now is Bitcoin's historical volatility. We're going to break this down and we're going to pair it with price action. We're going to be looking at the past 11 years, and Bitcoin has only had this low of volatility 4 other times in the past 11 years, and we've got to break it down pound for pound, move for move, looking at purely the facts in the charts. So what we're going to start with is the historical volatility. What you can do is pull this indicator up. You can go to your indicators and pull it up. This happens to be a custom indicator that pairs the volatility with some other indicators. So the colors may look different, but the levels are the same, right? So what you have is right now, we just breached this yellow line, making one of the lowest levels of volatility. Now, your first question may be, well, is low volatility good or is low volatility really, really bad? What is going on with this low volatility? Should we be concerned or should we be overly excited for what is about to happen? Well, we're going to break it down, right? You can see on the chart, we're going to date back all the way to 2013, right? And we're going to come all the way to present day. And you can see the first time that Bitcoin had this extreme low volatility was right here in May 2016, just breaching this yellow line. We followed that up with a little bit later in 2016, towards the end of 2016, having also extremely low volatility. We didn't have, again, low volatility for several years. It wasn't until 2019, March 2019, where we had that low volatility. And most recently, it wasn't from 2019, we had another extremely quiet period of that volatility until 2023. Most recently, September 2023, when we had that low volatility, and we haven't had it since. This is a key sign that low volatility has an explosive move right after. So let's rewind the clocks back to this time period and let's match it with price action. Again, on this channel, we're going to lay out the facts. There's no BS, there's no fluff, there's no hidden agenda, pure facts that actually help you. That's why you've just subscribed. But let's go back to this time period. May 2016. What was going on in the market that had us this low volatility, and what happened right after? When we pair it with price action, we can see, okay, May 2016 was in the heat of the bull run, towards the beginning of the bull run, where it was still relatively up for debate whether we were in a bull or we were about to be bearish. This is what we consider to be phase 1 of the bull, right towards the tail end of phase 1. So the bottom of the market is right here, right? Bottom 1, bottom 2. What phase 1 does is it just builds market structure directly on top of the bottom. It happens in every single market cycle, and every cycle to date has been the exact same. Tilt your phone to the side and subscribe. We've built phase 1 right on top of the market, and then we had our low volatility right at the end. So what causes low volatility? Well, What causes low volatility is if you wake up today or you woke up yesterday, Bitcoin is about the same price. It was also the same price 3 days ago, and it was also the same price about 5 days ago, and it's been the same price about 21 days ago. It's been pretty much the same price for a long time. A better representation of Bitcoin's price has been this channel that we have been in for well over 100 days. Right? It has resistance up here at our all-time high, 73,000. It has support down here at about 59,000. When we've been range bound inside of this for over 100 days. This is pretty common. Every time that we're in between phases, we have this calm period, right? You can look, this is the bottom of our market, the cycle that we're in now. And then we built phase one directly on top of that. And as soon as we rallied up to phase one, we moved sideways for over 100 days, again, creating very low volatility. And then the market shot up, and then we moved sideways for a whole bunch of days. And then the market shot up, and then we moved sideways for a whole bunch of days. This is very healthy. I would be concerned if we weren't doing this. This is the cycle and the types of moves Bitcoin has been doing for its entire history. So is there any concern with us moving sideways for over 100 days? Absolutely not. In fact, it's very healthy. Let's dig into it further, right? We understand, okay, May 2016, low volatility, end of phase one, and we shot up in price into phase two, and then again went sideways for well over 100 days before again reaching low volatility towards the end of phase two, right before reaching phase three. And then we didn't have low volatility again all the way until 2019, which was at the start of phase one of the bull. You can see 2018, bottom of the market, and then we moved sideways for at least 100 days. Right at the tail end of that, right on cue, low volatility, shot up in price. So what you can see just based on the first three that we've covered, the market moves sideways, people lose interest, people are like, wow, Bitcoin is boring, and that's the calm before the storm. We are about to have a storm. This right here is the calm before that storm. And the first three storms that we had were in Bitcoin's favor in a large manner, and they were all the same. Right at the tail end of phase one, big explosion. And then right at the tail end of phase two, big explosion. And then in 2019, right at the tail end of the bottom of the market, big explosion. So what you see is a common thread that once we get to the tail end of said phase, we have low volatility because quite literally the price is pretty much the same. Every single day you can hear a pin drop. It seems like Bitcoin is so boring, and that's right before a huge explosion. Bitcoin likes to take the world by surprise. It's done so in its entire history, and it's about to do the same thing again. So let's dig into it a little further. We understand, okay, Bitcoin has had this low of volatility literally 5 times, including the one we're in right now. There's only been 4 other times, and we've already covered 3 of them, and so far they look pretty good. As I mentioned earlier, there are some hidden clues that we're about to uncover. What we're doing right now is we're just laying out the facts. I haven't given any opinions. None of my opinions are paid for. I'm not trying to fluff anything up. We're straight to the point, straight facts, no BS. So far, so good. Let's get to the next one. We said that there was one in 2019. There wasn't another one until 2023. We had to go all the way until September 2023 when we had that low of volatility. And guess what part of the phase we were in? Let's take a look. What we're talking about is this tail end of phase one. Sound familiar? I think so. So what you can see is, again, bottom of the market here. This is phase one. Phase one rallies all the way up to this price, and then what does it do? It moves sideways for at least 100 days. Sound familiar? Yeah, we've done that pretty much every cycle so far. And you'll notice that at the tail end of said movement, we have this low volatility right before the huge market explosion. This one happened to take us from around 25,000 all the way up to our new all-time high with this little tiny volatility signal that plastered itself right on this chart, screaming for everyone to look at it. But most people overlook these things, which is why I bring it to your attention so you can be ready. And once again, towards the end of the video, after we discuss all of the facts, I'm going to explain to you what you should be doing right now based on the hidden clues that I'm about to unfold to you and the facts that we're discussing right now. So as you can see, September 2023, incredibly low volatility right here. The market had been moving sideways at the time for well over 150 days and almost 200 days. We struck that low volatility right at the tail end, and then we had an explosion. In other words, what we can see based on just the facts, without any opinions of what we hope to happen or what might happen or some crystal ball, what are the facts saying? The facts are saying we've had this low volatility 4 other times. All of them were in a bull. All of those were at the tail end of a phase right before the next phase. Why is that important? Well, we know that we're in phase 3, right? What we're going to do is look at the phase 3 so you can see for yourself what is happening with Bitcoin, right? So the distinct phases that we're in, we're at this red arrow, what we consider to be phase 3. Let's keep it super, super simple. I've identified the red arrow of phase 3 in every single cycle. 2021, this is phase 3. 2017, this red arrow is phase 3. 2013, this red arrow is phase 3. Every single cycle, Bitcoin repeats these patterns. And when you understand that, it's going to make you so much more money and save you so much money. So let's identify it. Bitcoin is in phase 3, and we may be at the tail end of phase 3. Let's take a look. Tilt your phone to the side and subscribe. 2013. We have the red box here, which represents the bottom of the market. We already discussed phase 1, the yellow box, builds structure right on top of the bottom, all right? So phase 1, the whole purpose is to build structure right on top of the red. By the way, this is the Fibonacci, right? If you want to go to your Fibonacci retracement, you can go from the prior swing high to the swing low and have these boxes checked. And if you're on the log scale, you will have fibs based on log scale, right? When you do that, you're going to understand that the cycles are exactly a repeating pattern. So yellow box is phase 1. It builds structure on top of the red box. We get to the next cycle. Yellow box is phase 1. It builds structure directly on top of the red box. 2021, yellow box is phase 1. It builds structure directly on top of the red box. 2025, are we somehow different in this cycle? No. Yellow box is phase 1. It built structure directly on top of the red box. Where it gets interesting is phase 2. Phase 2 always rallies to the 0.78 of the fib. It did so in 2013. Phase 2, white box, rallied directly to where? Right to the 0.78. 2017, white box, rallied directly to the 0.78. 2021, white box, rallied directly to the 0.78. How about this cycle? Was it somehow different? No, we did more of the same. We rallied directly to the 0.78. Now that's where things start getting heated up because this is now phase 3. Once you break the 0.78, it's phase 3. It's flirting real hard with the all-time high or just barely making an all-time high. Case in point, red arrow, phase 3. Flirting hard with the all-time high, just barely making it. 2017, red arrow, phase 3. Resistance at the red line. Flirting hard with the all-time high and just barely making it. 2021 was no different. Rallied right up to this red line, flirting hard with the all-time high and just barely making it. How about this cycle? Well, more of the same. Rallied up to this red line, flirting hard with the prior all-time high and just barely making it. Right on cue, we are in phase 3. Luckily for us, we've been in phase 3 for quite some time now. And again, we have some clues on the chart. 92 days we have been in phase 3. And when you look closely at it, you can understand that every time that we've had this low of volatility was at the tail end of a phase right before the next phase. The facts are here. We've identified it. 2016, tail end of phase 1, right before an explosion to phase 2. Later in 2016, tail end of phase 2, right before an explosion to phase 3. 2019, tail end of the bottom of the market, right before an explosion to phase 1. 2023, tail end of phase one, right before an explosion into phase two and phase three. So we have on our hands another low volatility. And when we look at purely the facts, they're looking good. But there are some hidden clues that we are going to use. Let me unveil these clues. So you may say, okay, well, how do we know? In the big picture, how do we tell, right? There's all these volatilities. Some of it goes up, some of it goes down. How do we know? How do we know if it's good or bad? Let me give you a simple, broad, basic rule. We've identified the lowest volatility. They've all ended in large rallies. What we also notice is that some of the highest volatility resulted in the exact opposite. Case in point, 2013, we had this high volatility here right before a 75% crash, right? We had this high volatility in 2014, right before an 85-90% crash. We had this high volatility in 2018, right before a crash. In other words, what we can look at just based on the facts, when there's super high volatility, there's a higher probability we have a crash. And when there's super low volatility, some of the lowest ever, we can understand that these cause large rallies. That's just a broad brush rule, a little secret code, just looking at the facts. Again, these are not opinions. Nobody has opinions here. These are pure, bona fide, cold, hard facts, which is why you subscribed if you like facts. So what we can understand is that Bitcoin has been moving sideways, right on cue with the other 4 data points that we have over the past 11 years. They all had incredibly low volatility. Once again, if you understand what I like to do is I like to live around the world. I've been traveling the world for 12 years. I love the beach. I've lived at some remarkable beaches in tons of country. I've been very, very blessed to do that. I've been very lucky to do that. What you'll notice about the beach, when you go outside and there's no wind and you can hear a pin drop, there's about to be a ridiculous storm. It's the calm before the storm. That happens all around the world in all the different countries. It's all the same. When you have an unbelievable calm that's abnormal, it's about to get crazy. The storm is coming. Tilt your phone to the side and subscribe. So what we can see here is that Bitcoin has been knocking on the door of phase 4. We haven't gotten into phase 4. We've been knocking on the door for 92 days. We're at the lowest volatility, and the other 4 data points had remarkably similar attributes, and they were all in a bull run, and they were all right before Bitcoin reached the next phase. What does this mean? What should you be doing now based on all of these facts? Before we get to the facts, I just want to say thank you for everybody's support about my dog. That I was not prepared to read everybody's responses like that. It was more responses than I ever dreamed of even seeing on one of our YouTube videos. So I just wanted to say from the bottom of my heart, thank you. For those of you who don't know, my dog of 11 years had passed away suddenly in the middle of the night. It was a shock and it was difficult to deal with. So I appreciate your support. We're really, really waiting on what they say happened to our dog, right? They're going to do an autopsy and, you know, we have no idea. It was a complete shock. And I'm just blessed that me and my family got to really have some incredible memories before he passed away. It was really a special time with my son, my daughter, playing with him, and it was cool. So the stars aligned, and I feel like it was meant to be, and I respect it. I'm just very curious about the autopsy. Now, back on track to here, right? What should you be doing now? Based on all of these facts, based on the data that we've discussed, should you be buying? Should you be selling? What should you be doing? Should you be panicking? Here's what you should be doing. When you look at the facts, you can understand, okay, there is a chance we go up. Well, does this mean we should buy now? As I've said for 5 weeks, this right here, what Bitcoin has been doing for 5 weeks, we have been in a battle of the weekly stochastic RSI versus the 2-month candle. I've been saying the same thing for 5 weeks in every video. What Bitcoin needs to do is have our stochastic RSI, our momentum, on the weekly chart, get us a new all-time high and continue our uptrend, meaning create a higher high in the RSI. If we're able to do that, we can null and void the 2-month candle. If we're not able to do those things, we will fail and the 2-month candle will win and we will have a downtrend. No matter what scenario happens, we're still in a bull run. It's still more risky to be out of Bitcoin than in Bitcoin. We're in a bull run. We're in the midst of it. What you should be doing now is be in the market. If you're somehow out of the market, you need to wake up and get in the market. You should start dollar cost averaging in. But once again, what you should be doing most of the time to be a successful trader or investor is nothing. The high majority of the time, you should be doing nothing, not listening to social media. They're always pressuring you to make all of these decisions. There's no professional trader that's making all those decisions. There's not. There's no successful trader on earth that's making that many decisions. Trade less. Trade way less and be comfortable not making any decisions. Throw away all the social media, just focus on the facts, stay cool, calm, and collective. But once again, you need to be watching this weekly stochastic RSI and can it create a new all-time high and finally break this barrier? And you also need to be watching this volatility. Luckily for a large number of my students, you have this indicator absolutely free. It's Steve's NVT HV indicator. You can pull it up and follow along. I just changed the color settings. That's all I've done. So take a look at this chart, follow along, make less decisions, make sound decisions. Do not follow Grandma Betty, who is the leader of the herd. You always want to do the opposite of her. By the way, I've read the hundreds and hundreds and hundreds of comments. You want more altcoin videos? Next week, I'm going to make some special bonus altcoin videos. Leave a comment down below with which altcoin you want to see in a bonus video. Things are going to get heated up here rather quickly, so be prepared. Hit that subscribe button. I'll see you right back here in the next video. This bull run is our road to 500,000 subscribers, but I need your help. Today, tell one person about our YouTube channel, how we spit facts, go against the herd, take no paid sponsorships of any kind. Road to 500,000, let's go.